All right, welcome. So today in our Zoom session here for the Income Navigator service, I'm going to jump through the main trading portfolio and where we are on things. I'll try to keep letting people in as they come in. If I do let you in, just make sure you're muted. I can't always keep hitting the mute button on people anyway. So, all right, let's get started. Let's jump in. Let's take a look at the account, and then I'm going to run through each of the positions in the account first. We're going to talk a little bit about hedging today. We'll talk a little bit about the weekly GCES strangles and why I changed those, even though I did a video on that. I'm going to cover that here. So pardon my voice. It's a little gravelly, and hopefully everything works well. I am traveling, so I'm in a hotel room right now, but hopefully you can all hear me well and this goes well. So let's jump in. All right. Well, with the dollar today, the U.S. dollar is up about 0.5%. So again, the strong dollar, I've been talking about this for a while, but if we take a look at the dollar, let me see if I can actually switch over to Thinkorswim for a minute. So let's take a quick look at the dollar today. For the week, we're down. For the day, we have a pretty good up day going. We're bouncing off the 21 EMA here, but MACD's heading lower. RSI's been dropping a bit. We might be starting to try to roll over. We'll see. But right now, with a strong dollar, that obviously hurts our positions on the Aussie dollar, the euro, British pound, those types of futures trades, which are down slightly today. So I just wanted you to get a sense of that. We're really watching that US dollar. How that moves really affects how all of these trades in the Forex products, and 6E is down pretty good today. So it's taken a pretty good hit, down 0.7% if you look at that. So the dollar's up about 0.5, but euro is down 0.7%. So it's a pretty good little pullback, although we were up yesterday, we were up the day before, we were up the day before that. So it's been a decent week overall, pretty much unchanged, if not slightly higher on the week. So it's totally fine. But it obviously is going to impact the P&L on the session. So let's jump back into the account, and that'll be the first one we'll look at. So we're just going to run through these accounts. We're also going to take a look at our trade tracker today. We'll spend some time in there, and we'll get a good sense of where we are. What do we have to do here? If we look at the very top up here as well, you can see, the day is pretty much a flat day. We're up $75, yay. But really, I want to draw your attention more to delta and theta. So delta 149, and then theta 633. So 633 theta is a bit light because we've closed some trades, and it's about 0.2%. I want to get that back over 0.3. I'd like to get close to 0.4. I think 0.3 is the new reality. I think that's where we're going to end up being on theta the majority of the time until we see some sort of volatility increase in the markets. We're really going to be stuck at maybe a 0.3 theta. We've been looking at like a 0.2 delta plus or minus. Ideally, we would like to stay under that because we can't really get our theta up a whole lot. Buying power usage, 167. It's at 56%, which is totally fine considering this bill position that we have in here that's using up about 10% of that entire BP. So really, we're about 140. We're really about 46%. So we have room to make some trades. Question is there anything to trade today that we can put on that's going to bump our theta and make sense? And I think we might have something. So we'll take a look. All right, 6A. This is the Australian dollar futures. We have two trades here. Number one, we have a strangle. This November 3rd strangle is up 4.2%. It's really gone nowhere, mainly because of the selling off of the Aussie dollar future. So 41 days in trade, only up 4%, but it can turn around quickly. Any kind of a bounce here would make this trade profitable pretty quickly. There's still 64 days left in this trade. We're nowhere near, the 21 days to potentially even have to think about doing anything, and we're up. So nothing to do at all on that strangle. And then we also 3 days ago put on a 112 trade. Being that we were down here, thought it was a pretty good time to put on a 112, and that's what we placed. And that trade is now up $150 since the open in 3 days, so not too shabby to make $150 in just 3 days on that particular trade. All right, so there's 6A, down a fraction today. If we look at 6E, we have a strangle. Now this strangle is down 3%. Again, nothing major here to be concerned with. We've only been in it 21 days. We're down 3%. It's down pretty nicely today because of the 0.7% drop on the euro futures. No big deal. I really don't care about daily P&L anyway. So flat trade, nothing to do. We'll leave that alone. Oil, we have a December strangle that we've been in for 3 days. It's up almost 8% in 3 days, so not too shabby on that oil strangle. Nothing to do here. Then we have a September 15th 112. Now that trades up really at the 95%. We could now take off of this trade the naked puts because they've now hit 95%, which is my takeoff area. So we're going to actually look to close these out. Let's see what we can do to make this make some sense. We'll probably close it at 2 cents, see if we can get filled. And there we go. All right, so filled on that. So we just closed out the naked puts on our September 15th 112 strangle. We closed them at 2 cents of a debit, and we took the total risk off, freed up buying power, and we can actually go back, take a quick look at our buying power, and see how that's changed. Now we're now sitting at a 47% BP usage now. So you subtract 10% of that, we're way under BP on this. Let's see who else is waiting. We'll let some people in. All right, so there we go. We just that's how I manage these things. You just take a few minutes to go through your portfolio. If I've got naked puts that are sitting here that need to be attended to, I simply just close those and we move on. So now we've closed the naked puts on this CL112, freed up the buying power, took off the risk. Let's take a look at this next one. There's another 112 on oil futures. You're sitting at 67% on the naked puts in 31 days. Nothing to do here. Just leave it alone. It's a nice profitable trade. And then we've also got a strangle on oil that we've had on for 21 days. This thing is sitting at 39%. Nothing to do here. It'll automatically come off at 50%. It's not in any trouble. Who cares? Move on. Now let's jump into some of the ES trades. All right. So in this expiration, we've got what's the PDS that remains on a long-term 112. Nothing to do here. You just let this thing go. It's going to come off today, and this will expire. We've already closed the naked puts. We've already taken a 95% winner, so nothing to even look at here. And then we've also got a long-term 112 at September 15th, just the PDS. So just to put debit spread remains. Nothing to do here. We got 15 days. It's sitting basically at 7 cents. I'm not going to close it for 7 cents. Here we'll see if the market wants to sell off and drop 700 points in the next 15 days, and this will start to pay off. If not, it'll also just peel off. I'm going to come back to hedges because I'm going to talk about hedging later. I've got 2 hedges on. One hedge is that we've had on for 1 day. One we've already had on for a week. These 2 hedges I expect to take full losses on, but I'm going to talk about why these 2 hedges are set up the way they're set up and how I'm hedging this portfolio right now with these. All right, let's take a look at the rest of ES. We have another 112 in September. This one also has the naked puts off. So 3 of the 112s no longer have naked puts on them. They're just to put debit spreads. Nothing to do here. Plenty of time left in the trade. All right, let's keep going. And we'll look at the October 20th long-term 112. And if I look at the naked puts on that, we're at 87%, nothing to do. We'll take them off when we get to 95%, or if there's an event and we have to reduce either buying power or change our delta around, we can take it off, but nothing to do here. On this one, the October 31st long-term 112, that's at 75% on the naked puts, nothing to do there. The November 17th long-term 112, it's at 54%, nothing to do there. We'll come back to strangle in a minute. Here's the November 30th long-term 112, 38%, nothing to do there. And then here's the December, the most recent one that's 15 days old. Nothing to do here either, 49%. However, today should be a good day to add a long-term 112. So we're going to add a 112 today as well, and maybe even a strangle. So let's take a look at the two strangles we have. We have a November 17th strangle, has been on for 20 days. This thing is sitting at 47%. We're 3% away from this thing closing, so we should have another winner probably by Tuesday or Wednesday of next week, depending on how the market goes. And then this November 30th strangle, it's down 25 bucks. It's only been on 3 days. Nothing to do here. So we have two strangles on ES. And again, we stopped the weekly GS-ES strangles mainly because we were forcing ourselves to take trades off at less than 50% many times. We were also chewing up buying power on trades, putting them on too close together necessarily, or we were chewing up buying power. We weren't really maximizing the strangle. So what I wanted to do, and the reason we stopped the weekly, which was a great strategy, it worked really, really well. We made plenty of money with that, was I wanted to size up and I wanted to start taking them off at 50%. So I could increase my size, which I couldn't do because I had 4 of them on ES, 4 GC at a time. It was maximizing my my buying power on that strategy. So by stopping the weekly, I was able to now size up. I can get about 3 of them on at a time and make a little bit more money, close them at 50%, and let the probabilities work a little bit better. So that's why we stopped doing that. We'll come back to ES in a bit. We only have 1 strangle on gold. Right now, this thing's up 11%. Nothing to do here on this particular trade. It's only been 3 days. We'll take a look and see if another one makes sense in a few minutes. We did put an RTY strangle on. This thing's been on for 2 days. It's up 11%, which is a pretty good return in 2 days. Can you take that off? You know, why would you wait 30 days to make 50% when you made 10% in 2 days? It would make perfect sense to take this strangle off today and put something else on. I don't think I'm going to do that. I think I'm going to let it play out a bit more. I do like where RTY is, or the Russell is right now on charts. So I'm going to let this strangle hang in there for a little bit longer. We have an Apple Leap, which is down about 5%, 34 bucks on this. Nothing to do there. We have an Enphase Leap, which is down 200 bucks. Enphase has just been a struggle down in here. We're at 30 days. We're down a little bit. Not going to do anything to change that. And then we have 3 SPY leaps on. We're at 9 or at 10%, 10%, and 4% on all 3 of them. They're all profitable, but they're not at the 30% winner. Nothing to do there. We'll leave SPY alone. And then lastly, we have T-bills. So we do have bill in here, which is the 1 to 3 month T-bill ETF. We do own enough of this. I put, essentially, I used 10% of my total buying power on this. I didn't use 90% of my account or all of my cash or any of those things. I'm not really willing to do that. I don't want to chew up my buying power. I don't want to have to exit out of these trades to free up buying power. I figure I can go all the way to to 90% buying power and on the entire account, and know that I'm only using 80% in an emergency for the actual trades, because 10% of it is in the T-bills. So we'll just let this thing go. for now. We got a distribution coming up in a couple days on the T-bills. All right, and I wanted to go back and take a look at ES. So I think it's time to put on another long-term 112 trade. So let's jump into that, and we're going to wheel all the way out 120 days, which is today. We're going to start, and I usually start just to model the trade, just to see that I'm doing things the way I want them set up, but I will start around 25 for the long, 25 delta, I should say, for the long puts, 50 wide, and then I'm going to go down to about 5 delta for the naked puts. And let's just take a quick look and see how this thing is going to look. All right, so here's what this trade is going to look like right now. We're taking in, we're looking at about $21-ish credit, but you're taking in $1,000 credit, and you're using about $5,000 in buying power. I like to double that because I'm trying to put on twice that size. So I'm going to pull in around $2,100 on this trade, using about $10,000 in buying power. So that's a nice 21% return in 4 months. Divide the 21 by 4, you're making 5% a month. Perfect trade. So this is what we're going to get into. So we're going to place this trade. And in order to do so, we're going to pull off these naked puts. Okay? And we're going to place the put debit spread piece first. 8.5's a lot. I think I'm going to tick it down a fraction. Let's go to the 23. Not too long. I really want to stay under $8 on the debit if I can. So we're going to stay under 8. We're going to go to this 725, and we're going to put this trade on. Let's see, 725. Let's send that, and we'll see what happens. While that's working, we're going to look at the 3,700. We're going to trade 4 of those. And we're going to put that trade on 14. It'll probably get filled at 1450, which it did. All right. So far, if we go back to our positions here, we can see that we've got the naked puts already working, and we're waiting to get filled on the put debit spread. I'm going to let that go for a little bit while we're here. Then we'll come back and see if we haven't been filled. So we're right at the limit. We might have to bump it up to 750. We'll close it before the end of this particular session. All right. So there's where we are on the portfolio. The only change we had to make right now was we took the naked puts off of our CL 112. We've already added the naked put part of a 112, technically a 224, a 112 on the ES position. So we're waiting on that to come off. 750 now. You know what? Let's just do it. And boom, we're filled. All righty. So we can go back here. We've got this trade on. I'm going to group them so I can pay attention. And this would be a December 29 LT 112. We'll group those. Why did I not? Maybe I can't group them yet. I don't know. I'm getting an error on it. So we'll try one more time, and if I can't, yeah, so something wrong on safety works. I'll group it later, but you can see this one's working. So we're off and running. Another 112. We'll post that into the platform later. Let's also see if we can get an ES strangle on. Since we're sitting on 2, let's see if we can get a third one on. We're going to go out to 90 days. I'm going to wind all the way down to about the 7 delta, about 39.50. Decent open interest there. So we're going to sell the 39.50, and we're going to go up to about the 6 delta here. So if we look at this trade, how close to existing positions are we when we look at this? We've already got positions working around 37.75, but we're well over 50 points away if I look at the ES Strangles that we have on, and we got 3 of them now. We got to take a look at this ES Strangle in here. This one's been on for 20 days. This one's only been on for 3 days. This is the one I would be more concerned about. It's at the November 30th strike, the 37.75, 4,900. And that's this 37.75 right here. We're over 50 points away. We're 75 points away. Not terrible. And then up here, though, we're about 75 points away as well. So I think I'm going to put this trade on here, and let's submit it and see what happens. We'll let that thing work. So right now we've got another ES Strangle potentially working. That would take us up to 3. And if you take a look at what I did as well, I'm sizing it properly because we're really going to take a look at the fact that this account is pretty doggone close now to $300,000, and which means a 2% loss would be a $6,000 loss, which means I can put this on for somewhere around $3,000 or so credit, because a 2x loss would give me a $6,000 loss, which is exactly 2% of 300,000. So I'll leave it at 2 contracts here. If I went to 3 contracts, it would put me at around 3,400, which would be over my 2% loss. If I took a 2x loss, that would be roughly a $7,000 loss. Too much, so I'm sizing properly on that position. Let's take a look at gold as well. We only have 1 strangle on gold. It's 3 days open, so we may not be able to trade gold as well, but we're going to go out to as close to 90 days as we can. We're going to drop into that 7 range. It's only a 20-point difference on the puts, and on the calls. And now we just got filled on that strangle. On the calls, it's only a 15-point difference. To me, it's just not enough of a difference. I'd like to see 50 points or so. So I cannot place this trade, and I'm not going to place any trades on gold. But we did get filled on this strangle here. Let's see if we can group this one. I don't know that we can. Now that one we could do. So we did get the November 30th strangle. This one just got placed. I'm also going to place an order to close this at 50%. Boom, that's done as well. So now we have 3 strangles. All of them have auto orders to close, and we'll just let this thing percolate. So we were able to group those. We just couldn't group the 112 for some reason, but we'll deal with that later. All right, so we were able to put on a 112 trade in ES. We took off the naked puts on a CL trade. That's what we're looking at so far in this account. And we've got a strangle that also went on. So there you go. That's our bit for today. Buying power back up to 61%, which is basically 50% when I take off my bill. So that's perfect. Right at 50%, exactly where I want to be on this particular account. All right, so we got a few more people that are just joining in late, but what I'm going to do is just make sure I remute everybody just in case. And let's take a look at the actual account now and figure out how are we hedging this. So hopefully everything here that we've done so far has made some sense. And let's look at how we're hedging. Let's jump into our account. Okay, so we've got the daily tab, which is where I'm entering all of my delta and theta from the portfolio. Then I enter my net lick and my buying power usage. I calculate it here, but it should match the trading platform, which it does. And then my daily pluses and minuses. Today will be the last day of the month. So we'll see how we end up today. Right now, there's nothing closing. So we're all good. All right, so let's jump into the different trades that we have on. Maybe I can make this a little bit bigger. Okay. All right, so here's our trade tracker. Let's take a look. So right now we have these leaps on the 3 SPY, the 2 other leaps that we already talked about. We have 2 hedges we've already talked about. We have the 6A 112, 2 oil 112s, of which now I've taken off the naked puts. So I want to fix that trade. So I took off the September 15th 59 naked put, which is this trade. So what I will do today is we're going to go down. I'm just showing you how I work through it here. We did take this off. I'm going to paste it down to closed trades, but not the whole trade, and I'll tell you why in a minute. So closed trades, today's 8/31. Call this a win. And we're also, I think we closed it for what, 2 cents. Because it's a 112, when I close these, I double the credit because it's a 112. I'm closing 2 of the ratio of the naked puts to everything else. So I'll put in 4 cents here, and you can see we've closed this now. We've locked in $390. So we have another winner on my daily. I'm going to add 390 here, since that's what we took in so far today. All right, and let's go back to the main. In the waiting room, I do not have anybody there, so everybody is here. All right, and what I typically will do with this trade is, I'll be in the winning trades, I color them green, but what I will do over here is I will put a note in that I closed the 59 naked put for 2 cents on 8/31 for the, and I will put in the entire trade here, the 69, 68, 59 CL 112. All right, so I put that note in here so that it denotes that I closed the naked puts. Then I will go back up to the original trade that I have on, and I will also put that note in here as well, and I color it. This is just my own methodology here, so, and I'll color it yellow. And essentially what that means is I no longer, I will no longer have a credit on this trade, and I'm no longer using buying power on this trade. So this trade is now just a put debit spread on here. In fact, I will even take the 59 off, and now it's just a put debit spread. But at least I remember that this was a 112. It no longer is a winner or a loser unless it's a winner. Then I will donate it, designate it as a winning trade if we make more money on it. But right now it is a free put debit spread. Okay, so that's how I'm looking at that. And let's go back and keep moving. Strangles on futures. I will add the new strangles that I just put on as well. So these are the strangles I have on. The ES and GC strangles, I do track those separately. I am going to create a new ES strangle. We'll put that in here when we get to it. And then I will also add the new long-term 112 trade. I'll just do that later. You guys don't have to sit here for that. But that's how I add to these accounts. So how would I hedge this portfolio? And I use this sheet to kind of give me a sense of how I would hedge. I only hedge what needs to be hedged. Leap puts, sure, you can hedge those. And we'll count those as something I'm going to hedge. Even though I would be happy to take assignment on those, I will hedge those. 112s on futures, I typically won't hedge those because they're 20% out of the money, and I have a put debit spread, and I could take assignment on something 20% out of the money. We'll see. Strangles on futures, I will hedge strangles. And then these other strangles on GS and ES, I will hedge those. And then these long-term 112 trades on ES, I will not hedge those because I don't really hedge 112 trades. They're so far out of the money. And my stop loss is a little bit different. All right, so I need to hedge some trades. So here's a quick down and dirty way for me to figure it out is I look at the credit that I received when I opened the trade, and I'm going to multiply it by 2. So on the leap puts, right now, these are $3,234 worth of credit. And you can see that at the little bottom here. So $3,200 worth of credit. If I took a 2x loss on these, it would be $6,400. I'm not going to hedge these 112s. These strangles on futures, there's $11,450 worth here. Okay, at a 2x loss, that's going to cost me $23,000. And then on these strangles here, 7160, 2x loss is going to be around $4,000 there. When you add in all of these potential 2x losses, so assuming I'm going to get stopped on everything that's not a 112 trade, it's going to cost me about $44,000. Again, I'm assuming that I can get out of everything at a 2x loss, but I'm also assuming that I would take a full 2x loss. So there's some give and take here. It's just giving you a sense of what I'm hedging. So I really need a hedge that if we drop more than 20%, we've got bigger problems. But I'm going to look at a 15% drop in the market. I don't know that a 10% drop would be where I care, but I'm looking at a 15% drop in the market. And what happens at 15% down, I need to cover, assuming if we drop 15%, that I'm going to need to cover quickly, $44,000 worth of potential losses. How would I do that? So if we go back to the account, let's take a look here at the hedges that we have on. So right now I have 2 hedges at 14 days. I typically will go out to about, I look for the $1.50-ish, but let's take a look exactly what that means if I was hedging those. So hedging those at 14 days at roughly $1.50, it's somewhere around, I don't know, 2 delta to 3 delta. You can go higher. But I'm going to put on 2 of these. Essentially, I don't mind spending $150, and I could do one of the 5 deltas at 4,300. But we've found that it's more advantageous to actually put 2 at half of that price on. We get double the bang for our buck. Technically, a little bit more bang for our buck. So let's take a look at what these 2 trades will look like. I'm going to take that off. I'm just giving you a sense of why. And let's look at the curve on ES. And these would be, I believe, these 2 in the middle here. All right, so let's take a look at our P&L graph. If I hate the way Tasty works on this. Well, let's take a quick look at this. If we drop 15% today, which is going to put us somewhere around 38.50. So if we drop down to roughly the 38.50, okay, right in this range here somewhere, you can see that the expected P&L from this trade is somewhere around $42,000 to $44,000, which is perfect, right? Because I already figured if I took a 2x loss, assuming that everything goes to loss on this move down 15%, which doesn't mean that will happen, doesn't mean I can't get out of other things, but if everything goes to a 2x loss, for me, all the strangles, leaps, everything, just not the 112s, I'm going to take about a $42,000 hit. And these 2 ES puts together, these naked, there's actually 2 sets of 4, or I'm sorry, 2 sets of 2, which is 4. These will net me somewhere in the neighborhood of $44,000 in income. Also, that's just assuming that the price moves there. If volatility increases, these are going to be worth even more than that. These are probably going to be worth closer to $50,000 or $60,000 on that particular move. Right? So that's a great tip. I appreciate that. I didn't look at it quick enough, Tom. Moving to those strikes. I appreciate that. All right. So that's a helpful thing to click on those. I don't think I've done that before. All right. Anyway, so there's why I choose those particular strikes when I'm hedging. Is it a perfect hedge? Does it mean I'm going to save everything? No. If we drop 15% in a short couple weeks of time, we've got some significant problems. However, I'm going to be hedged for 2x losses on all of my leaps and strangles. The 112s, I will have to play those by ear. I might have to roll. I might take assignment on some, not others. I have those put debit spreads that are going to start paying off. If you're in the trap on those 112s, they're going to pay off somewhere significantly higher just by looking at these 112 trades. And I'll look at the one that I just put on today. So if we look at just this particular one, let's get out here. But if we look at this particular one, I got to fix it anyway. Okay. All right, so this is the 112 we just put on. If we drop, and we only talked about a 15% drop to 38.50. Well, 38.50 still puts us in the trap. Okay, doesn't mean we won't maybe have some kind of a paper loss here, but we're still not in danger. We're at 38.50. It's at the bottom end of the trap, but 15% down does not put us out of the trap. It puts us in the trap, which puts us at $7,000 in income for that trap. Now, remembering that I have probably 6 of these on at a time, 6 of these landing in the trap, again, if the market stays there and never comes back up, which would be unusual, but who knows, could happen. If we stay there, then multiply 6 times 7, okay, and you've got another $40,000 worth of income coming in. So technically, a 15% drop and we stay there, we're going to make about $80,000 on this account, and we're only going to lose about 44 on all those strangles and leaps. So we'll actually gain like 40 grand. Lots of other things. It's not a perfect scenario. It doesn't mean that there's not other things that could happen, but I'm giving you a sense of how I feel comfortable with the hedges that I have on, considering the shape of my portfolio, and I'm managing as an entire portfolio here. All right, so that covers the new 112 trade, which we can go back to this 112. Okay, and I'm going to enter this, and you guys can see exactly how I'm doing that. But you can see this particular trade here that I put on. I have the 3,700, 43, 43.50. Going to reshare. Okay. So today is 8/31. We just put this trade on. The trade expiration date on that is December 29th. So it's 12/29. Long-term 112. And our strikes were 3,700, 43, 43.50. So 3,700, 4,300, 43.50 were the strikes. And I got to make sure, because Tasty's a little funky on it. 22.75 was our naked puts. Okay, so doubling that is 45.50 minus the 7.50 for the put debit spread means we got into this trade at a $22 overall credit, which is not great with the volatility being low, but it's okay. So we'll take the 2,200 there. And the buying power that we used on this trade was 94.21. This is the initial buying power, which does drop. So 94.21. I will normally take this trade. I will copy this. We will head to Discord. I will then enter this trade into the Discord channel. So we'll do it live so you can see how I'm doing it. And you can see how cut and paste errors can occur periodically. All right, so you saw how we put on that, and this is a new ES long-term 112 in IN account. And then I got to give you guys the DTEs because I know if I don't, somebody's going to yell, but that's 120 DTE. Okay, and I will check out long-term 112 IN trade, post it, boom. You should see it now in your Discord. So that's how we entered that. I gotcha. So freezing the top pane so you can see my labels on there. Same labels that you have if you downloaded this spreadsheet as well. All right, so let's move back into it. But I get what you're saying. So you want to see these frozen. But essentially that gives you a sense of how I figured out my ES hedges, which I may add more or less depending on what happens, but I assume that I'm just going to keep losing $150 a week on this account. But this $300 here represents approximately $44,000 in income if we drop 15%. Again, it's a black swan type of scenario, not a 5% down. But I like the way the portfolio is positioned. We just put on a new long-term 112 trade, which is perfect. So now we're back up to sitting on just 4 of these, or I'm sorry, 6 of these trades, even though we have one coming off today. In fact, let's go in here and we're going to take this one off because it's expiring today. We talked about it earlier. It's a nothing trade. We will make no money on this. It's just going to expire today. I don't give myself wins or losses on the put debit spreads. Boom. So we are now cleaned up. Got our trades on. We're back down, cleaned up on long-term 112 trades. We will add that strangle back in here in a little later when I get off of this. So hopefully this gives you a sense of how we're working through the trade tracking sheet, which allows me to figure out how I'm hedging. It also figures out where I can place trades potentially. And then when I'm back in the account here, I'm able to put those particular trades on and monitor my overall positions. Let's try one more time to group. Let's see if we can do it. Nope. So still an error on Tasty. So I can't group that one for some reason. But new trade on there. New strangle trade is on. That one's already been grouped. And we're in good shape. We're at our max BP of 50%. Our theta is decent, 729. So we picked up some theta. If you remember when we started, I believe it was 600 and change. So we added more theta by putting on a long-term 112 and an ES strangle. So we got our theta back to where it should be. Delta is still in good shape, according to our metrics. And that's where we are. So I covered why the weekly GCES is now just putting these on at full size. We did a portfolio review today. I covered why and how we do hedges today. We put on a strangle. There's not a whole lot more that I'm going to share today. I'm going to wrap it up here in just a moment. Yeah, you have to close TT and reopen it. Yeah, I have found that has helped. Usually once it's closed for a while and you reopen it, then the grouping works. And if you ever sell something out of that grouping, then the group breaks and you can't regroup that same day. You got to wait. Goofy, it's Tasty trade. Half the stuff works half the time. All right, activity. You wanted to know about the strangle that we put on. So where was that strangle here? Oh, it's the top one here. So this was no, that wasn't it. Yeah, that was the strangle. Yeah, I'm maybe off on it, but this was a strangle. Sorry, the 2275. This was the 3950 4975 strangle. I'm going to go back and I'm going to look at this trade. Yeah, no, buying power was correct. I did have my total cost slightly wrong because I got to take the 1450 and multiply that times 4, which is essentially what we have to do. So we'll get this thing fixed back up. So 1450 times 2, I'm sorry, would be 29 minus the 750. So that puts us at 2150. I think I said 22. So I will fix that. Can you copy an existing 112 and modify the contracts in Tasty Trade? So you want to go here and copy this trade? You really can't. You can copy a trade you've already made, but you can't copy the full 112. Well, you can copy pieces of it. So you start here, do a similar order, and then I got to add the other pieces to it. So it's kind of hard to do, but you can do it this way. I'm not sure what you're trying to accomplish, but I can work it this way as well. Right, so there's now once I've got it here, then I can put it into any other account that I have, and that's typically what I'll do is once I get a trade running, it's just 112s because I got to split them into two trades. It's a lot more difficult. You have to copy the two separate pieces in it because you can't put it all on at the same time in Tasty. Eventually, hopefully they'll get that fixed as well. All right, I think that's it for this session. Covered a lot of different things in this session with you guys, and you guys a chance to see the hedges, see me put on a strangle, see me put on a 112, see me adjust a 112 in oil here by taking the naked puts off, and reviewed the whole portfolio. We're in good shape. We're up a massive 80 cents on the day. So overall, all good. We'll let you guys go, and we'll see you back in the Discord channel. Take care, everybody.